Welcome, everyone. We'll get started here in just a moment. If you can confirm that you hear us by putting what state you're coming from into the Q&A box, we will get started in just a moment. All right, it looks like we have students from all over the United States, so this is wonderful. If you haven't already, go ahead and put what state you're coming from into the Q&A box, and we will get started. Thank you for joining us for today's webinar. We hope that you all are safe and healthy and appreciate you taking the time to be here today. Just a little housekeeping before we get started. We'll be running a live Q&A at the end of the webinar, so if you have any questions during the presentation, please type them into that same Q&A box. And if you miss anything, don't worry, we'll be sending around the recording when it's available. We'll also be presenting poll questions, so have your mobile phone ready to text in answers, or there will be a web option as well. My name is Allie Nickel, and I'm the Product Innovation Manager at the CE Shop, the leading provider of online real estate education. Today, we are reviewing real estate math as it relates to your licensing exam, presented by Charlie L. Fortish. Charlie comes to us with many years of experience within the real estate industry. He owns his own brokerage, is a certified real estate instructor, develops real estate curriculum, and has experience speaking on many topics including real estate, entrepreneurship, management, and business communications. Now, without further ado, I will hand it over to Charlie.
Hi, good afternoon, or yeah, even in California, it's afternoon right now, so that's good. It's across the board. Want to get started by getting an idea of how far along you are in your course, getting ready for taking the exam. And we're going to be doing some poll everywhere stuff. So you can either text the CE Shop 127 to 22333, or you can go to pollev.com, the CE Shop 127. And once you do that, give me a B, C, D, or E. And oh, I like that. Whoever the first person was that jumped in, and keep it. You know, don't close this once you put in your response, because we've got about maybe another 9 or 10 more, I believe, of these before we get this over with here. Give y'all a few seconds. Okay, well, right now it looks like as far as this goes, where some of y'all are halfway, some of y'all are almost done, and there's several of y'all that are just getting started, which welcome to the adventure. This is hopefully going to do y'all some good. There are people that just flat out don't like math, and that's okay. Hopefully I'll get you past that before we get finished. First off, we're going to kind of give you the good old pie chart, because what's anything without a pie? When you're looking at calculations, better known as math, 10% of your whole test on this particular part is in calculations. Refer to your testing guide from whoever your testing service is, PSI, Pearson, AMP, and if there's somebody else out there, whoever that might be, and basically go from that to know where you are. To give you an example, I'm in Louisiana. We have 80 questions on our test, so we're going to have 8 math questions. So as you can see, It's not like it's the bulk of your test. And I know pretty much for all of the tests, you tend to need 70% to pass. So hopefully I can get you a few math questions right before we finish the hour. And that's, you still have a lot of room, even if you have a little problem with the math. But I'm going to try and clear up the air a little bit on it. So right now, this tends to be in, like I said, different states have different outlines, but this is kind of a composite view here of the various types of questions that you're looking at. We're going to have some basic math concepts, measurements. Some states are lucky and don't have to deal with that. Louisiana's one because we use a lot of French and Spanish measurements down here, and I figure that doesn't calculate too well into feet and yards. And also the transactions. The good part about this is you're not going to have it be too deep of a question. I know when you go through courses, you might have a 7 or 8 step process to get to your answers. You're pretty much looking at maybe 2, 3 at the most. A lot will be just one calculation because you're going to be timed, and you don't want to spend a lot of time in math because you'll wind up, if you spend too much time in one question, you'll panic. And when you panic, you start reading fast and you miss little things like all of these are an answer except, or which one of these is not right, and your material, but you're going to answer them wrong because you're speeding up. So the thing is to kind of pace yourself and you'll be in good shape. So we'll start out with percentages. You only wish that you would get all of your questions on percentages to the level of this one right here. What is 1% of 420,000? 420,000 divided by 100, which is how many percent to make up a whole, you got $4,200. And believe it or not, you may get a question that's this easy. And if you do, just be happy, thank the math gods and the people at your testing service, and move on to the next one and feel good about it. How do you convert percentages to decimals, or decimal to percentages, or fractions to decimals? Here's a little thing for you here. It's just a matter of moving a couple spaces left or right. And one thing I didn't mention when we got started, if you're a note taker or somebody that likes to take screenshots of stuff, you are going to be getting I guess I would call it a copy of the course. So you'll have the slides and everything. So you don't have to be spending more time concentrating on writing and less time on paying attention. We're here to make it as good an experience and as comfortable of an experience as possible. Find the missing number. Yeah, this is pretty much the way it's going to be for everything. You've got the whole, you've got a percentage that's expressed in hundredths, and you've got a part which, when you play with the other two, gives you your answer of where you're at. So pretty much everything is the whole times the percentage equals a part, or the whole part divided by a whole is a percentage, or the part divided by the percentage equals a whole. Little slide I like is this one right here. This one can be very valuable to you because this one tells you the main ones that deal with whole, percentage, and part, and lets you know which is which. The good thing is it's a great tool to have right now. The bad thing is when you go take the test, you're not going to have it with you. So definitely take a look at this, and you'll see how this flows into everything as we progress along. So we've got a borrower, and every once in a while, because I am a real estate broker, you will hear me say buyer as opposed to borrower. That's just because that's how I see them. Pays $500,000 for a house, putting 40% down and borrowing the rest. If the lender charges 3 points, how much does the borrower pay in points? Give you all a few seconds to click on what you think the answer is, and then we'll show you how to come up with the answer. so far either everybody's going for D or not everybody's throwing up an opinion yet. Oh, there we go. There's another person. Okay, well, I'm going to go ahead and move forward with this. And correct answer was 9,000 for it. So let's go through the steps of this one just so you can see how it was done, provided you did it the same way. First off, you start off with the 500,000 that you're borrowing, and you multiply that by, you see 100 minus 40 because they're putting 40% down. So you're actually getting a 60% loan. So when you throw in that, you're getting a loan of $300,000. So you're looking at that, which is a nice thing. And you're going to be being charged 3 points. So you're going to take that 300,000 and multiply it by 3% to come up to 9,000 for how much you're going to be paying for your points. We'll try a second one to go in a different direction with your whole parts and percentages. Different purchaser bought a house for $500,000 and paid $6,800 for 3.4 points charged to the loan. How much was the down payment that that this purchaser had? And we'll go ahead and move from here. And the correct answer was 300,000. Either somebody just barely squeezed it in or changed their answer when they saw they were wrong. But that's okay either way. So here we go. Let's go ahead and work this thing out. So we're looking at the dollar amount of the points divided by the number of points to come up with the loan. So you know that you're looking at paying $6,800 and there was 3.4 points that were involved. And so you've got 6,800 divided by 0.034 equals 200,000. So 200,000 was the loan amount. So you take the purchase price minus the loan amount to come up with your down payment. And there you go. Now, one thing I'm going to point out right now, this is a little bit of the cynical side of me coming out. Everybody was pretty much divided between 200,000 and 300,000, regardless of what the percentages actually were there. This is very much a testing service, sick question writer thing. If there's 2 steps involved, just in case you stopped short on the first calculation, that number is going to be there for you so you can feel good about being wrong. If you take it all the way, the second number will be there and it'll hit you. So, the only way you really know that you're missing a math question is if when you finish your calculation, you don't have one of the 4 answers. So just a little thing to stick in the back of your mind there. Also notice that whether it was by design or not, because I wasn't involved with writing the questions for this, a lot of times you're going to have C for an answer because if it is a couple of steps, you're just going to have B equals C or A minus B equals C. One kind of a way or other it comes back at it. So commissions. In the long run, this is the only one that you really tend to do when you finally get into the business. You look at a commission rate times what the sold price was to get an amount of the commission. Or if you get the commission, you divide it by the sold price, you'll get the commission rate. The amount of the commission divided by the commission rate is the sold price. So you got something here. We're going to go ahead and just roll through this one. A seller agreed to pay a 6% commission on a house listed for $500,000. The house sold for $509,000, and the seller agreed to pay $9,000 of the buyer's closing cost. How much was the total commission? $509,000, which was your sales price, times 6% commission, was a $30,540 commission. This also has another little catch me in here too. You'll also find in some of these questions that you get when you take the real exam, you've got little things like it listed for $500,000. That's nice to know, but that has nothing to do with what they're asking you to find out. It's just a number thrown in. But if you would choose to do 500,000 times 6%, I can guarantee you, if this was an A, B, C, D, one of them would be 30,000 because they're not going to take account. They know some people are going to go for the listing price as opposed to the sold price. So here's a good little grid just for how you do commission splits. You've got a total commission, which would be great if you got one of those. I do know that there are some states that allow dual agency, some that don't, which if they do allow it, you may possibly do a listing and also work with get the buyer also. But basically the total commission is broken down between the listing broker and the selling broker. And there's some agreement in there as to how much the cooperating broker, better known as the one that brings in the buyer or the selling broker there, gets. Within each firm, the firm is going to split whatever their percentage is with you as the licensee. Those numbers can vary all over the place. So it's just a matter of paying attention to what they say and when you get your problem. So here we go. Licensee A with broker B listed a property for $650,000 with a 6% commission to be shared at 40% to the cooperating broker. Licensee Y, who is on a 70% split with broker Z, brings the winning offer of $645,000. How much will Y be paid? Give you all a few seconds on this one. There we go. I was waiting for somebody. I was going to say, none of y'all want a commission check? Come on. Okay, we've got a few people that want the big money, and we've got people in two different directions on, somebody decided they didn't want the big money. The main thing on this one, you can get to all four of those answers regardless of how you do it, because licensee Y with broker Z, they're the 40% cooperating broker. So you're going to be dealing with the lesser amount in this one when you look at it, because licensee A and broker B are playing with the 60% part. The correct answer, unfortunately, was the least one, was the smallest check in there, 10,836. So here we go. This one, as opposed to doing the calculations out there, well, we're doing the calculations, but also showing you how it works out with the little grid that we had before. The sales price was $645,000. You're going to multiply that by 6%, and you've got a $38,700 commission. Because we're looking at the broker that brought the buyer into the equation, we only want to know what 40% of that is. And 40% of the full commission is $15,480. We're only concerned with what the licensee made. So you would multiply the 15,480 by 70% to get your 10,836. In another math question, you could get the exact same thing, and maybe they would ask how much the broker got. So you would have multiplied by 30% on that one to find out what the broker got. So as I said, lots of ways you can do the question, and just got to make sure you grab the right parties to calculate your answer. Property taxes. When you're looking at this, you're dealing with mills, which is $1 per $1,000 that you have. If you express it as a rate, it's $1 per $100, and you divide if you doing it per $1,000 or mills, you divide the assessment by 1,000 to know what you're dealing with on your rate there. So that's kind of a little bit convoluted, but that's pretty much across the board in all states deal with millages. So here we go. You've got a house that's assessed at $403,000. It's purchased for $400,000. The tax rate is 12 mills. How much are the annual taxes? When you're doing tax bills, it's by the assessed value of the house, not what it's purchased. So right off the bat, $400,000 doesn't have anything to do with it. So when you look at this, you've got the $403,000 multiplied by your 12 mills to come up with your annual taxes. Since it's per $1,000 is your tax rate, you're going to divide the $403,000 by 1,000 to get, and then multiply that by 12 for your annual taxes, which comes out to 403 times 12, or $4,836. Calculating simple interest. Simple annual interest is strictly an interest-only loan. Eventually you're going to have to pay the principal back, but for the case of what you're looking at figuring out in the question, you're only looking at the interest for a period of time. So you've got the loan amount times the interest rate equals the annual dollars that you have pay in interest. If they give you the annual dollar amount, you divide it by the loan, and that'll tell you what your interest rate is. Or if they tell you how much interest and what the interest rate is, you divide that, and that gives you your loan amount. So if a lender receives $18,000 annually in payments for a straight loan at 4.5% interest, what is the amount of the loan? So since we're looking for what the loan is, we're going to take the annual amount of interest and divide that by the interest rate. So as I said, let it go ahead and print out your little question all over again. Straight term loan, as I said, all you're worried about is paying the interest on the term. We'll worry about the principal later. So you look at the amount of interest divided by the interest rate is the loan amount. 18,000 divided by 4.5%. You borrowed $400,000. And that's it. Just a simple one calculation, and you've got your answers. So let's try it out. A buyer borrows $400,000 on a term loan. The monthly payments are $1,500. What is the interest rate? Let y'all play and pick an A, B, C, or D on that. Oh, this is fun. This is the first time we've had answers across the board on this. Okay, for some reason, this one's not going to allow me to see allow y'all to see what the correct answer is till we actually go and calculate it. So we're going to move from here. And one other little tidbit for y'all to think of when you do this. Every now and then, you're going to have an insufficient information to calculate. Almost never will you have the answer, have that be a correct answer. If anything, you'll have more information than you need, than not everything that you need to do it. So 4.5% was the correct answer on that one. So those of you that were in the B column got that one right. You got the annual amount of interest, which is the divided by the loan amount equals the interest rate. So you've actually got to go take your $1,500 for your monthly payment and multiply it by 12 to figure out what your interest is actually paying for the year, divided by your $400,000 loan to get your interest rate. So you're paying $18,000 a year. Divide that by 400,000, you've got 45.045, and that converts over to 4.5%. So y'all did pretty good on that one. Okay. This varies from state to state, but calculating principal and interest payments. We're talking about amortized loans here. You're going to have a fixed payment structure where you're paying principal and interest sufficient to pay the full loan amount with interest over the entire term of the loan. Calculations are done using an amortization table. You take the loan amount divided by $1,000, and that gives you your number that you have to multiply by the factor. And usually you will get told what an interest rate is and for how many years your loan is. So if they told you you had a 4% interest rate for 30 years, you would wind up just sliding down to 4%, slide over to 30-year loan, and your factor is going to be 4.78. Depending on the state, sometimes when you go to take your test, there's going to be a sheet of paper with an amortization table stuck on the side right next to your screen for you to see. Other times, they'll have a little amortization table in the question that you get on the screen. It just depends on what state you are and how they pass that by you. So here we go. Here's our first shot at one of these. You've got a lender that, we're playing with two lenders here actually. You've got one lender that'll lend $300,000 for 30 years at 3.75%. You've got another that'll lend that same $300,000 at 4%. If everything else is the same in the contract, contracts on both sides and all of your things, what is the difference going to be in the payment? Okay, I know some of y'all are still calculating, but I'm going to go ahead and show the answer anyway on this one. Correct answer was $42, so half of y'all got it right. So let's see where that one came from. First, you have to figure out the easy part. $300,000 loan divided by 1,000 equals 300. You're going to look over on the table, and you've got for the 30-year loan, your factor is going to be $4.64. That's for 3.75%. Do it one more time, and the one that's going to be at 4%, you're using a 4.78. You're going to be 1,434. Subtract $42 difference. Just for the sake of being in the borrower's shoes, or if it's a 30-year loan, you're going to be paying $42 for $42 more for 360 payments. That's going to add up to a bunch. So obviously you want to get that 3.75. Calculating principal, interest, tax, and insurance payments. Basically, you're going to have a 1-year property insurance or ad valorem tax. You're going to divide that by 12, and that's going to be escrowed by your lender on a monthly basis. So every month you're going to have the tax and the insurance added in with your principal and interest. So we're going to whip on over here to another poll question. Buyer puts 20% down on the purchase of a $400,000 house. Remainder of the price is financed at 4% interest amortized over 30 years. The insurance is $3,600 a year. The annual taxes are $3 per hundred of the assessment on an assessment of $355,000. How much is the principal, interest, tax, and insurance? Give you all a few seconds for this one. Okay. 25% group that just jumped up to 40 at $2,717 is your correct answer. So here we go. Here's how we got to that point. You've got an 80% loan because you put 20% down on your $400,000 piece of property. That's a $320,000 loan. If you divide that by 1,000, you got 320 units. So your 320 times $4.78, which is your 4% interest rate for 30 years, Your principal and interest is $1529.60. Look at that. That's A, but you're not done yet. You take that $3,600 worth of insurance, divided by 12, that's another $300. Gee, now you're up to $1,829.60. So B would look like a good answer. But now you have to figure out the property tax. So you've got $355,000 divided by the 100 because you're being taxed per $100 of value. So you've got 3,550 of those. Multiply that by $3, 10,650. That's your annual. You got to divide it by 12. Comes out to $887.50. So if you add all three of those numbers, the principal and interest and the tax and the insurance, you get $2,717.10. Crediting payments to principal and interest. Amortized payment on a 30-year loan at 4% annual interest is $1,434. What is the loan balance after the first payment is made? You look at the old loan balance, subtract the principal paid to get your new loan balance. Or you're starting at $300,000 minus your principal paid to come up with your new loan balance. So the way you got to figure this one out is you've got, at least you've got a payment. Your principal interest payment was $1,434, but you do have to figure out how much interest you're paying and what the principal payment is. So you take the loan amount times the interest rate to get your annual interest. $12,000 annual interest. So you're paying $1,000 worth of interest a month when you're starting out. So you go back to that original of what your monthly payment is, subtract out your interest, and you've got a $434 payment that's going to your principal. So you take your loan minus your principal paid, and you're at $299,566. At this point in time, you think, oh my God, I'm never going to do it. But when it comes time to do your taxes, you're going to have a big chunk of mortgage interest credit that you can take. So there's a good side and a bad side to it. Numbers and conversions. I'm not going to go through these for you. You can read them there, but pretty much depending on the question you get, sometimes it's a linear feet. Sometimes they get into square feet. Square feet usually comes in if they're talking about rectangular survey system when you're looking at that very last one on the square side. A mile by a mile equals 640 acres, and that's a section. So where can you possibly go with one of these? Virtually anywhere. But we're going to go with a little drawing here. When you're looking at this, you got an area of a rectangle, an area of a square, and your area of a triangle. So you're looking to figure out what's your total square footage of what's in blue there. So you start off with the rectangle. Easy enough, length times width. 120 times 60 is 7,200. Now you're going to be looking at the triangle, which is half of the base length times the height. So you're going to be doing half of 60 because that's what you're looking at there for your length. And you're going to be doing that followed by, which will get you down to 60. I should say 30 right here times 60 comes up to 1,800 square feet. So two of your answers, if you do the triangle first and want to stop there, are going to be a choice. And if you do just the rectangle, that'll be a choice. If you add them both together, which will probably be C, would be 9,000 square feet. So sewer lines being installed at a cost of $31.50 per front foot. Sorry about that, tongue-tied. What is the installation cost? Real easy thing to know. You got to, first off, if it's an acre, you know you've got 560 square feet. You divide that by the depth, which is 396 feet, which gives you 110. So that's going to be your front footage. Multiply that by $31.50, and you're up to $3,465. Now we'll do a quick problem with that. The cost to have lines installed to connect to public sewage disposal system is $200 per front foot. How much will it cost to have the lines installed for a lot which is 115 feet times 180 feet? Should be able to do this one quick. This is just a one calculation. And for this one, somebody's totally changing their mind. Okay, we're all over the place for this one. Correct answer, that just jumped up to 22%, is 23,000. And here's how we got it. When you're looking at the dimensions of a lot, the first number is always the frontage. So if it's 115 by 180, you've got 115 feet up front times $200, it's $23,000. There it is for B. But like I told you before, if you did choose 180, right there's your 36,000, so you can get it wrong and feel good about it. Recording and transfer fees. This is for recording fees, revenue stamps, transfer and conveyance taxes, a little bit of everything. You got a buyer that's purchasing at $400,000, property with a down payment of 3.5%, FHA loan. Remainder of the purchase price is being paid by a loan at 4% interest, amortized over 15 years. Transfer taxes are 60 cents per $500 in taxes. How much are the transfer taxes? Okay, here's we're sitting at 50-50. We're going to go ahead and look at, all right, a third. Got anybody got a taker for A, or we're just going to leave A sit as it is? Let's go see what the right answer is on this one. Correct answer was the one that wasn't showing up there originally, $480 for D. How did we come up with that one? Well, first we got to find out how many units of $500 exist in that. And if you're talking about a $400,000 property, divided by 500, you've got 800 of those guys. So got 800 times 60 cents. The loan interest rate doesn't matter what it was. The down payment doesn't matter. All that matters was your starting price and what your tax rate was. Here we go. Another $400,000 property. It's purchased with 20% down payment. Remainder of the price is being paid by a loan at 4% interest amortized over 15 years. Recording fees for the mortgage are $75 plus $1 per thousand. How much are the recording fees? Alrighty, for this one, your correct answer. Whoa. Not sure what I did there. I think I cleared that. Sorry about that. Correct answer is 395. How did we come up with that? Purchase price minus the down payment is the loan amount. So you got 400,000 minus 20% of that 400,000 means you put down 80. You had a loan of 320,000. 320,000 divided by 1,000 is 320. $75, which is usually where people tend to mess up, plus the 320 times $1 is 395. I was really surprised nobody went for 320. I'm really happy that everybody was making sure they added in that $75. It's a good thing. Okay, prorated costs between buyers and sellers. Usually you're talking either tax or insurance for these questions. It's basically charges that are going to be paid and credited in one direction or another. If you have an accrued situation, that means your tax bill is paying at the end of the year in December, and you're paying for everything for the year that's already ended. So in that case, you're gonna the seller is gonna owe money to the buyer, because if whatever day it closes, for that amount of time, the seller was in the house. So the amount of the taxes would be paid to your buyer, so that when they get the tax bill at the end of the year, in theory, if they held on to it, and even if they didn't, they were paid for that portion. If it's prepaid, that means in January, the seller paid for the whole year, and he's not living in it for the whole year. So you're looking at the seller getting some money back, because the first time that the buyer will see a tax bill will be in January, and that'll be for the year coming up. So it's just a matter of knowing which direction you're going in there to know what you're going to be doing. So you're going to either be dealing with accrued or prepaid. Most of your questions are going to be in statutory or banker's years, where every month's got 30 days regardless. Every once in a while, you might catch one with actual calendar days, and you just have to remember February has 28 and which ones have 30 and 31. The period, you need to know the period of time that the charge covers, and that'll be determined by accrued or prepaid. And who owns the day of closing? Usually the seller does, but sometimes the buyer gets to tack that one. So let's look at a question here. Property has annual real estate taxes of $4,800, closes on April 27th. The closing is charged to the buyer. Charges are based on a statutory year, which means 30 days in every month. The seller paid taxes for the calendar year on January 15th. How will the closing statement address taxes? All righty. Getting some movement all over here. This is interesting. Here we go. Correct answer is B. 3,253 credit to the seller, 3,253 debit to the buyer. So here's what we come up with. You've got $4,800 divided by 360, which is how many days are in the year because you're using a statutory year. Comes out to $13.33 per day. You've got 244 days you need to deal with because the seller has already paid for taxes through the end of the year. So you're taking from the 27th through December 31st, which will, take the slide's word for it as 244 days at $13.33 is 32.52.52, rounded up to 32.53. Now, for the people that are like math people that don't like to do math or not math people that want shortcuts, this is basically an accounting entry of debit and credit. Coming out the gate, A is going to be wrong and D is going to be wrong because the debit and the credit amounts need to be the same. You're being told that the seller has already paid the taxes for the calendar year. So if it's closing on April 27th, that means the majority of the year is going to be the amount of taxes in question. The bigger number here is 3253, because if you decided to accidentally go January 1st to April 27th, that's going to be your 1546. So just a little way, if you want to massage it, you're at least, if you guess, you're at least at a 50-50. And if you pay attention to where it's telling you it was paid, you can slide right into that answer, and it doesn't matter if you touch the keyboard on the calculator. Calculating net proceeds. Seller nets $290,000 for the sale of a house after paying a 5% commission. What did the property sell for? 100% of the sales price minus the commission percentage is the seller's net proceeds. So 100% of the sales price minus 5% of the sales price is the 95% that your seller is getting, which is $209,000. So all you got to do is divide that 209 by 95. That property sold for $220,000. One quick one on that. Seller wants to net a minimum of $300,000 from the sale of property. If the commission is 6% and the seller will need to pay off a $100,000 loan, what is the least the property would need to sell for? 400,000, 420, 421, 426, or 427. Alrighty. 426 is the correct answer. So, how did we come up with that? 100% minus 6% minus $100,000. That comes into play because he's got to pay off that loan in addition to what's going on. So you're looking at $300,000 is that number. So 94% of the sales price minus 100,000 is 3. Now we're getting into those good old quadratic equations, if you can remember those guys. You need to get everything, all the dollars on one side or the other. So you got 94%. You're basically wiping out that 100 by putting it over here. So 94% of the sales price is 400. Sold for 425, 531.91, which rounds up to 426. Now, there is a possibility, and I don't know in this who's doing what, but if you are going for a broker's license and a broker's license only, you possibly could see calculations for net operating income, depreciation, capitalization rate, or gross rent multipliers and gross income multipliers. So, after saying this, saying that to you, if, when you purchased your course that you're taking, you did purchase the Exam Prep Edge, and all of these topics are going to be covered there. So make sure you go to that and check out those things, before you go take an exam. What to expect? You're going to get some experimental questions. There's going to be 5 to 10 of them. Those questions are basically being tested to see if they're going to make it into the pool of real questions. They're not graded. They don't count against you, and the timer stops when you take it. So you may not know when it's a question that's not being graded, but you're not being penalized in time when you're working on getting those questions. And then as far as your total questions and your passing score, check the candidate guide for your state, because I was peeking in when y'all were putting in what state you were from, and there's variations of how many questions everywhere. So that's your easiest way. As far as what your questions do, you can return to any question that you want along the way. You can change your responses, although I don't recommend that, because usually your first response comes from your gut and it's right. And if you go back and change it, chances are you're probably making them turn it to wrong. And main thing is, provided the time hasn't run out. So, just kind of keep an eye on that. And if you don't know an answer to a question, either mark it as unanswered or just skip it completely, because when you get to the end of your questions, you're going to be given a choice if there's time left. Do you want to go back to unanswered questions or marked questions, or have you had enough and you're ready to get out of here? And other than that, basically, good luck on everything. I've enjoyed talking with y'all, and it's question time.
All right, thank you, Charlie. Like you said, we'll go ahead and take some time for questions now. Just a reminder, please be sure to put your questions into the Q&A in your control panel. Looks like we do have a few here. This is a really good one from Susan. Are calculators allowed for their exam or just scratch paper?
Depends on your state. In most states, the answer is going to be yes, but and I know in Louisiana, you're allowed a basic 4-function calculator, the kind you can get for $2 at Walmart. If it's a scientific calculator where you can store formulas, they're not going to let you in with it. And they also give you a couple pieces of scratch paper. They don't allow you to bring in your own scratch paper because you might have invisible ink on it, so you can give it a little breath on your paper and see what the formula you need to use are.
Okay, great. Let's see, Rick has a question. Where's the exam prep that came in our course? So if I can answer this one, if you check in your student account when you log in to take your courses, there should be an Exam Prep Edge course there as well. If not, give our customer service a call and they can help you out with that. It looks like another one. How do we get a copy of the slide deck? So we will be sending that out. So in the next day or so, we'll be sending out a recording and a copy of this presentation for you. So just check your email in the next day or two. Are there any other questions out there? All right. Well, with that, we will wrap up. Thank you, everyone. We appreciate you for being here. I'd like to thank Charlie for joining us today. Your knowledge, expertise, and willingness to share it with our student community is greatly appreciated. Look for an email from us with this presentation and keep an eye out for invites to additional webinars in the near future. And once this webinar ends, you will have the option to fill out a survey. If you're able to take a minute, we'd love your feedback so we can continue to provide valuable webinars to you. Thank you again for joining us today, and we'll see you next time.